Do you believe that a $10,000 price for Tesla shares is feasible? Chamath Palihapitiya, though, predicts that it will occur shortly. Though other experts may have different opinions on this topic, you probably wouldn't want to miss this information if you want to hear what Palihapitiya has to say. According to a previous prediction by Chamath Palihapitiya, the value of Tesla stock will double or perhaps triple in the next years due to its bright future. According to him, this is consistent with Tesla's present position in the stock market. Born in Sri Lanka and raised in Canada and the United States, Chamath Palihapitiya is a venture capitalist, engineer, astronaut, and the CEO of Social Capital. From 2007 to 2011, he had a senior executive position at Facebook. He is the CEO and creator of Social Capital, according to CNBC, whose goal is to improve society by finding solutions to the most difficult issues facing the planet. Social Capital was established to make investments in businesses and industries, including health, finance, and education that are overlooked by traditional venture capitalists. Since then, the business has grown to include investments in internet startups including Slack, Tesla, and Amazon. Prior to continuing, Mumu created a new role known as the industrial chain. If, for example, you're looking for stocks that may move in the next few days or weeks, the industrial chain can be of great assistance to you. It offers a thorough overview of the hottest sectors, such as semiconductors and electric vehicles. Finding stocks quickly, either upstream or downstream, allows you to concentrate on specific industrial segments more rapidly. Additionally, since segments and industries are related, you could forecast price changes more quickly without having to read a lot of research papers to understand the relationships inside a single industry. In the description, a link. Palihapitiya previously stated in a CNBC interview via Kelly Evans that Tesla's incorporated trade idea, which is the 5-year convertible bond that has the negative risk of a bond but permits 95% of the possible upside of stocks, he sees this as a call option for one of the wealthiest businessmen on the planet. He continued by saying that the convertible bond yielded 5.5% when he first started purchasing it, and that, as he considers Tesla CEO Elon Musk to be a friend, he is ready to place a wager on the businessman. Evidence, however, indicates that Palihapitiya is a wise investor who does not make decisions based solely on the recommendation of close friends. This suggests that he believes in Tesla's stock prospects, not simply his pal Musk. Palihapitiya, like other seasoned and well-respected financial experts, is of the opinion that the Tesla brand is valuable and has the potential to achieve more success. Indeed, they think Tesla is headed toward demonstrating precisely that. The stock price trading value has now stabilized after several days of negative numbers, much to the holders' joy. A strong advocate of Tesla, Palihapitiya maintains his optimistic view on the company's stock in spite of some investors losing hope and liquidating their holdings. He even took part in a sell-off a few months following Tesla's optimistic prognosis. It should be noted that earlier this year, Palihapitiya predicted that the world's energy generation infrastructure will be turned upside down and that trillions of dollars worth of bonds would be capitalized, causing the electricity utilities to be severely disrupted. Despite this, Palihapitiya sold his Tesla stock in 2021 when the stock began to peak. Tesla's value will double and then quadruple if this doesn't occur. Tesla is a sustainable energy company that has the potential to surpass the fossil fuel business. As a result, the stock of Tesla will eventually outperform, creating a far larger opportunity to reach $10,000. Palihapitiya claims that this raises the question of why he sold his Tesla stock later that year. Some investors wondered if he had lost faith in the brand, just like others. In response, he said he did this to shift his money around and not have an unlimited flow of cash, which could be interpreted as an agreement or a denial. He went on to say that he sold his Tesla stock in order to invest in other companies and that he develops ideas and then plans how to finance them. The market for totally electric cars is expanding steadily nowadays. Numerous factors contribute to this, such as evolving customer expectations, new safety and vehicle emission requirements, and technological advancements. But Tesla and its distinctive business strategy deserve a great deal of the credit for the general public's enthusiasm and adoption of electric vehicles. Elon Musk, the CEO of Tesla, has been upfront about his goals for the business from the start. According to Musk, Tesla wants to expedite the introduction of sustainable transportation by launching attractive mass-market electric vehicles as soon as feasible. The foundation of Tesla's profitable business strategy is this mission. Instead of using franchise dealerships, Tesla bases its business strategy on direct sales and servicing. The deployment of charging stations, which stands to be the largest barrier to the widespread use of electric vehicles, is another important component of the business model of the EV companies. Tesla has expanded the scope of its business model to include energy storage devices for both commercial and residential buildings. Notably, Tesla entered the market with a distinctive strategy. It adopted the opposite strategy, concentrating on developing an attractive car that would generate demand for electric vehicles rather than attempting to construct a reasonably priced car that it could mass produce and market. Tesla strengthened its business plan after establishing its reputation in the industry and producing and delivering its prototype vehicle. Three key components make up Tesla's business model: selling, repairing, and charging its electric cars. While most automakers sell their products through franchise dealerships, Tesla sells to customers directly. It has established a global network of galleries and showrooms controlled by the corporation, most of which are located in cities. Tesla thinks that by controlling the sales channel, it can accelerate the development of new products. More significantly, it improves the purchasing experience for customers. Customers solely engage with Tesla employed sales and service personnel at Tesla showrooms, Service Plus centers, and service facilities, which eliminates any potential conflicts of interest that may arise from dealing with auto dealerships. As of May 25, 2022, Tesla had 823 sites worldwide. Additionally, Tesla uses online sales, allowing customers to customize and buy a Tesla from the comfort of their home. Tesla has mobile technicians who perform house calls as mobile service assistants. In certain areas, these technicians were formerly known as Tesla Rangers. In certain situations, the service is provided remotely. For example, the Model S has the ability to upload data wirelessly, allowing personnel to observe and address certain issues without ever having to touch the vehicle. Additionally, Tesla has established a network of more than 30,000 superchargers across the globe, allowing drivers to charge their Tesla cars for a fourth of the cost of gas in roughly 15 minutes. It appears that the goal is to make maintaining electric cars more affordable and simple in order to accelerate the rate of adoption. Tesla is viewed more as a technology firm than an automotive company by many investors and financial analysts. That is at least the rationale behind the stock price explosive rise of almost 300% in a single year beginning in 2013. Publications have been attempting to draw parallels between Tesla and companies whose growth rates were comparable at the time. Adam Jonas, an analyst with Morgan Stanley who has supported Tesla since its inception, set a price target of 103 for the shares bucks when they reach adulthood. Tesla was trading at 661.58 on May 25, 2022. To find out the precise performance of Tesla stock, visit Moomoo. In the bio is a link. A fact: Tesla and the tech industry are similar in a number of ways. Tesla has adopted the tech industry's disruptive mantra. Similar to other tech firms, Tesla aims to disrupt the conventional car industry's business models by selling directly to customers. A devoted following is sparked by its founder and product pipeline, much like that of well-known firms like Apple. Similar to investors in several technology firms, Tesla's backers endured an extended period of quarterly losses before reaping the rewards in 2021 when the company turned a profit for the first time. The inability of electric vehicles to become widely used without the infrastructure necessary for on-the-go charging presents the largest barrier. Nevertheless, Tesla intends to keep expanding the number of supercharger locations it has across Asia, Europe, and the United States. Tesla created a profitable business plan for introducing attractive electric cars to the market while not having invented the electric car or even the luxury electric car. Building a network of charging stations was one aspect of the plan to address a major barrier to the widespread use of electric vehicles: the need for long-distance refueling. One factor contributing to Tesla's stock's explosive rise since its initial public offering is the company's novel business strategy, which involves maintaining control of sales and servicing. Overall, because Tesla was able to keep up its position as a top producer of electric vehicles, or EVs, Chamath Palihapitiya thinks the firm will grow more than tenfold from here. Despite the rumors that certain investors, including Palihapitiya himself, sold their Tesla stock, reputable and seasoned analysts and investors continue to maintain their bullish outlook on the company. Not only did Tesla manage to soar above the competition and maintain its lead in EVs in the face of the epidemic, but it also managed to defy the odds. To access additional content about Tesla stocks, subscribe to this channel, advises Goldman Sachs Wall Street analyst Mark Delaney,